Hello everyone, and welcome back to Explain the Charts. Today, on November 25th, 2025, we are taking a close look at Tesla, symbol Tesla, which saw a massive surge of nearly 7% yesterday. This explosive move was primarily triggered by weekend comments from CEO Elon Musk. He announced on his social media platform X that Tesla is not only designing its own AI chips, but plans to produce them in higher volumes than all other AI chip makers combined. He specifically mentioned the AI5 chip design is nearing completion, with the AI6 already in early development. This news significantly boosted investor confidence, reframing Tesla once again as a leader in artificial intelligence and robotics, not just an EV company. This was further amplified by a Melius research report calling Tesla a must-own stock, suggesting the company is at an inflection point for autonomous driving. Interestingly, this comes right after a week of market jitters and fears of an AI bubble, which had pushed Tesla's stock down over 3% just last week. It seems, for now, that robotaxi optimism and AI ambition are winning the battle against bubble fears. So, let's jump into the charts to see how this fundamental news is shaping up technically and what we can expect next. Looking at the daily chart, we can see the full context of Tesla's recent journey. The stock hit a 52-week high of around $488 back in December of 2024 before entering a significant downtrend that found a bottom near $214 in April. Since that low, the price has been in a general uptrend, characterized by extreme volatility. Notice the massive price gap up we saw in early November, which launched the stock from the $250s to above $280 in a single day. After another powerful leg up, the stock peaked around $468 in early November before pulling back sharply last week on those AI bubble fears. That brings us to yesterday's candle, a huge, high-volume green candle that completely reverses the short-term bearish sentiment. This move decisively reclaimed the critical $400 psychological level, closing strong at $417.78. From this long-term view, the primary resistance to watch is the 52-week high up at $488. On the downside, the low from last week around $391 now stands as a crucial support level. A break below that level would invalidate yesterday's bullish momentum. Now let's zoom in on the more recent price action, filtering our daily chart from the beginning of October. We can see a period of consolidation throughout October, mostly trading in a range between roughly $413 and $460. The stock then experienced a sharp drop in mid-November, falling all the way to about $391. This pullback corresponds directly with the news reports citing rising fears of an AI market collapse. The price found solid support in that low $390s zone, holding it for several days before yesterday's explosive move. Yesterday's candle represents a powerful breakout from that short-term downtrend. The high volume accompanying the price surge adds significant credibility to the move, suggesting strong institutional buying. Bulls are now firmly back in control, at least for the short term. Switching over to the 1-hour chart, we can get a more granular view of this reversal. Here you can clearly see the steep sell-off that occurred last week, with consistent lower highs and lower lows. Then, look at the price action from yesterday's session. The stock gapped up significantly on the open, pulled back slightly to test the $401 level, found immediate buyers, and then began a relentless climb for the rest of the day. This shows incredible demand and suggests that traders were eagerly waiting for a reason to buy. Closing near the session high of $421.72 is another sign of strength. On this time frame, the immediate hurdle for bulls is to break and hold above that $422 level. The key short-term support is now the session low around $401, which also aligns with the top of a previous consolidation area. Finally, let's drill down to the 15-minute chart to analyze yesterday's intraday action. We can see the market opened with a significant gap up thanks to the pre-market buzz from Musk's posts. The price dipped in the first hour, a common occurrence as early profit takers sell into the strength. Crucially, Buyers stepped in right around the $401 mark, preventing the gap from closing entirely. This is a very bullish signal known as a gap and go, where the gap level itself acts as support. From that point on, the chart printed a beautiful staircase of higher highs and higher lows throughout the day. The volume remained consistently strong on each push higher, confirming the conviction behind the trend. This textbook intraday trend indicates that buyers were in control from the open to the close. So, to summarize everything, let's go back to our daily chart. The narrative for Tesla has shifted very quickly from bearish fears back to bullish optimism, driven by the AI catalyst. Your key resistance levels to watch are yesterday's high around $422, followed by the recent consolidation zone between $440 and $450. Above that, the major target for bulls is the 52-week high near $488. Key support levels are the low of yesterday's session at $401, followed by the critical swing low from last week at $391. A break below $391 would be a major red flag for the current rally. Now for some potential scenarios. The bullish case, which I believe has about a 70% probability, is that we see continued upward momentum. I'd look for the price to break above $422 in the next day or two, which would reinforce the trend and open the door for a test of the $440 to $450 resistance area. A positive overall market could help fuel this move. The bearish case, with about a 30% probability, would involve a failure to break yesterday's high. If the price falls back below $401, it would signal that the breakout was a one-day event. This scenario would gain significant strength if broader market fears about the economy or an AI bubble resurface, potentially sending the price back to test the $391 support. Going forward, watch for follow-through volume and whether the price can build a base above the $410 level. Any new headlines, positive or negative, regarding Tesla's AI, robotaxi, or EV sales will likely cause significant volatility. This is not financial advice, and you should always do your own research before making any investment decisions. Trading involves risk, so be sure to manage it carefully. Thanks for watching Explain the Charts, and we'll see you next time.